Kia ora, I'm David Chester with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news questions are deepening about the Chinese economy and how it will extract itself from the ongoing funk, or whether it even can. But first, we're now in the heart of the Northern Hemisphere annual vacation season. Anything happening now is reactive to the general inactivity amongst investors, company managers and regulators. In China, they released foreign direct investment data, and that remained modest in July, with the main inflows coming from friends. Western companies are now moving to the exits, and their central bank moves to keep the yuan value elevated for wider stability reasons means those leaving now are not getting hurt by the exchange rate. Meanwhile, China's Evergrande Group, once the country's second largest property developer, Country Garden is the largest, filed for bankruptcy in New York on Friday, New Zealand time. And it is not only property developers reporting huge and widening losses, Chinese car makers are too. Cutbacks are widespread amongst companies and across all demographics. Anxiety levels are rising. Over the weekend, it was reported that at least 5 local governments will be allowed to sell 1.5 trillion yuan's worth of bonds, that's $350 billion, to repay earlier debt from local shadow financing. And later today, China will review its prime loan interest rates. No one seems to be sure whether they'll cut them or not, but a cut does seem likely. More analysts are asking whether China's 40-year development boom is over and what that means for investors. Ratings agency Fitch is nervous. They've had China's sovereign rating at A+ stable for more than 15 years, but it is now signalling that conditions are changing to the downside as they see it. In Japan, CPI inflation was unchanged at 3.3% in July, but this was noticeably higher than market expectations of 2.5%. Core inflation stayed above 3% too. In Australia, their pipeline of investment projects has climbed to a new record high in 2023. The value of projects in the investment pipeline was almost worth $1 trillion in the June quarter of 2023, a $180 billion or 22% increase on the level prior to the pandemic. The US Treasury 10-year yield will start today at 4.25%, unchanged from Saturday, but 9 basis points higher than week ago levels. And the price of gold will start today at $1,890 an ounce, and little change since Saturday, but it is down $12 from a week ago. And oil prices are holding at just over $80.50 a barrel in the US, while the international Brent price is $84.50 a barrel. These levels are a net $2 lower than week ago levels. And the Kiwi dollar starts today slightly softish at just on 59.2 US cents. Against the Aussie, with little change at 92.6 Australian cents. Against the euro, we're marginally softer too at 54.5 euro cents. That all means our trade weighted index is at 68.4 and down a minute 10 basis points from Saturday and 10 basis points from a week ago. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.